We've seen the growth so far in the equity options, all driven by the retail participation, and we expect that to continue the growth into the rest of the year. We have additionally added some market makers to the platform. From the 1st of June this year, we had new liquidity providers as well. That is additive to overall volume that we're seeing on our platform.
How are you attracting and educating investors in Europe?
In Europe, the retail participant itself is very, very different. You can't really look at European participant as a single type of client. You've got all of those intricacies between different countries. But the reality of what we're seeing so far in Europe is, of course, that a lot of the time the retail participants, with the exception of certain countries, are driven towards more opaque OTC style contracts, whether it's CFD, warrants and turbos. So what we're doing to educate is we're partnering with some of the retail broker platforms to put out the option-specific education on the use cases for the option. It's evergreen education, so it's not necessarily driving them to do specific trades, but giving them the tools and the necessary knowledge on how to use the options to hedge their portfolio to generate income.
What were the results of your retail investor survey?
We've conducted that survey. It took over 5,000 responders, 1,000 per each country that we conducted that survey in. And we ultimately, the good thing that we found that there is definitely a trend of willingness and the desire to participate in the options market, particularly around the equity options complex. There isn't a single approach that can be done across the whole Europe. So each country will have some of its own intricacies on how we approach the education. But generally speaking, people want to see video content. People want to see that content from trusted sources, and exchanges came up top of the list of those trusted sources. And they want to see collaboration with a retail broker platforms. They want to have the ultimately actionable advice of how they use the options going forward. And there's the easiest path to the execution, having the account already with a retail broker. A lot of the young participants, so under 35s, want to be participating in the options market as well. This is very important because the current demographic of the retail option users in Europe is showing us the indication that it's much older. So the average age of the current option users is around 55 years old. Why that is important? Well, if we want to build out a sustainable user base that are looking into their investments long term, it is certainly the younger generation that we need to be looking at how they're building out their portfolios, how they're looking after their future, and how they want to achieve their long-term financial goals.
How much of that is influenced by Amsterdam and its long history of options trading?
Of course, Amsterdam is that exception country, I think, in Europe, really, where the listed options are very high on the agenda of the general public. But even there, we see the aging population of the options users. There's been a great history and a great example of option education in Amsterdam, and that was done predominantly in the 90s and early 2000s. And I think to this day, there are some fruits of that education. Now, what we want to do is bring it across the whole Europe. Of course, UK, go to France, go to Germany. Spain is also on our radar at the moment as well, and educate the population that there are alternatives to what they're currently using. So we did a study around the warrants market as well, for example, and looked at some examples where the customers actually, although they have easier access to those products than they would do to the options, they are actually worse off than if they were to go to the listed options market. So that education is also helpful, not just for the retail participants, but also to our conversations with the regulators when we give examples of let's say, equal playing field in terms of the derivatives market.
How are you lowering barriers to entry for retail traders?
Cboe in Europe takes a pan-European approach. So you can get exposure to country-specific indices or equity options under one roof. We can go from UK through France and Germany and etc. So by having that all under one roof and essentially clearing on the same CCP, you can achieve the offsets as well. Now, to take it a step further, we're talking about the equity options in particular. The Cboe Clear is the CCP that we are partnering with. They are the most connected to the CSDs across Europe as well. So upon exercise and assignment, what happens is you have the stock being delivered to the domestic CSD, which means essentially where you ultimately want to trade your stock, you'll have that in that depot. So it avoids the costly and operationally difficult transitions from the let's say German CSD for UK stocks into the UK CSD. So pan-European approach and the same single point of access for cash equity trading as well as the equity options as well. So that's all done under the same exchange.
What regulatory changes would you like to see?
We recently published a paper. It specifically talks about the regulatory changes that we would like to see in exchange-traded derivatives space, and particularly to help develop the retail market across all of Europe. Not just EU. And the majority of those changes are essentially simplifying the access. What is important in Europe is, in my opinion, is to also give participants and retail participants in particular access to non-levered trading of options as a first step entry. So essentially buying the options and paying the full premium, you know how much downside you have and you know what the potential exposure is to the upside. Taking that concept a step further, cash overriding and stock overriding should also be allowed, because essentially you've got a locked-in money or the stock within the same position, and gives you a certainty around the outcomes of the overall options trading activity. So simplification around this. And I think also the regulators should start looking beyond the wrapper. There are alternatives to the options and futures markets, which are traded in OTC style contracts, CFD, warrants, turbos, that essentially give you the same economic output, but potentially expose you to higher risk as a retail participant. Why higher risk? There is often no multi-market maker price discovery, so opaqueness around the pricing. A lot of the times you get worse prices than you would do in exchange-listed derivatives. There's also a counterparty risk that the client is exposed to, whereas in exchange-traded derivatives they are cleared by the CCP and essentially a central clearing body.
What are your priorities for innovation?
With European Commission ambitions around the Savings and Investment Union and the Retail Investment Strategy Review, we certainly want to make sure that the exchange-listed derivatives are part of the equation. Create a healthy market where the retail investor is participating in the capital markets and not just sitting on the savings. I think it's important to give them the tools to hedge their portfolios and hedge their stock exposure. Again, if we start taking a look back at the history, the options were created essentially as a hedging tool, not a speculative tool. So giving that ability to the retail is going to be important and will help to drive the overall capital market engagement, in our opinion. From the product side of things, of course, we'll look to where the client demand is, and we build on our experience in the US, particularly around the shorter dated maturities, but then also around the space where the options are used as part of the portfolio for ETF construction, etc.